The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 27th, terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstances of the markets, the bulls and the bears, the buyers and the sellers. We're going to go figure out what it is that they're communicating to you and I at 1 o'clock, and I'm absolutely grateful for your presence here. Don't forget, I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648, internationally 727-445-1044. Of course, you can email me, steve@tfnn.com. I'll try to get to those. And ping me inside our Tiger's Den. Right now, this is Terrific Tuesday. Of course, it's the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 57 points. She's trading at 17,566. S&P is off 12, trading at 2,059. NASDAQ Composite down 22 points. She's trading at 5,012. Russell 2,000 off 18 points, trading at 1140. The DAX closed down 109 points. The FTSE closed off 52 points. Gold is unchanged, trading at 1165. Silver basically unchanged at 1586. Light sweet crude is not unchanged. It's back $1.10, trading at 42.88 or so. Natural gas actually has a little bid inside it. Looks like it's up 2 pennies. Of course, that got taken to the woodshed yesterday. We'll take a look at that. Leading the charge here in equities to the upside, you've got Shire PLC up 7%. That's up $15. Now we're taking a look at dollar-wise, what's leading the charge to the upside, not necessarily percentage-wise. Alibaba, that's up 2%, up $2. Baidu, up $5, about 3%. Bailey and Pharmaceuticals, up 75 cents. Coach is up $1.36. Yahoo, up 60 cents out there. To the downside, MicroStrategy, MSTR, down 14%. That's off $27. Priceline's off $14. That's down 1%. Watsco, that's down $11, about 9%. McKesson Corp, down about 10%. I wonder if McKesson has been trading lower all day, or that's just on news of the potential buyout of Rite Aid out there. And I don't know. I'd really have to go take a look at intraday if there was some kind of charge out here. Now, McKesson's a big supplier inside of the drugstore business. So maybe the consolidation with inside the drugstores, Walgreens, putting out there that they're trying to work out a deal, I believe, to buy Rite Aid. Cummins Inc., that's off about $9. Canadian Pacific Railway, that's down 8. Road Runner something or other. Hey, how about that Grubhub? Well, that Grubhub is off 777. Looks like it hit the jackpot. Unfortunately, the jackpot inside Grubhub is to the downside. So where do we begin? Now, let's begin. I've got a great question from a newsletter subscriber, longtime listener here inside of the at TFNN. And so I want to be able to, so I'm going to read the question, and then we're also going to take a look at what's going on inside the markets. And so over the course of the show, I think is what I will do is focus on really trying to answer that question. The question goes like this. It says, Steve, I've got a question about what you think the markets are doing. Don't you think that this rally is all about the probability that there will be no rate hike this week? That would be, is Fed going to, the meeting started today, I believe, so it would be tomorrow. when they release the minutes out here. But in any event, the question, don't you really think this rally is about the probability that there will be no rate hike this week or this year? This bull rally started on October 2nd when the dismal job numbers came out. But in my opinion, things turned around because of the jobs data. The reasoning behind that is that there would be no rate hike in October. I'll get it out, don't worry about it, or maybe even 2015. So since October 2nd, the markets are coming back up. They climb back to a certain level. They've climbed back to a certain level right in time for the Fed announcement, which is tomorrow. So if there's no rate hike, and it's implied that there won't be a hike this year, don't you think the markets are going up? And will probably take out the highs. I know you just follow the charts and what they're saying, but I'm wondering what your opinion is on this. So what I'm going to have to do is answer the question really more so as it relates to the charts. But we can take a look at the charts to try to answer that question as well, because we're really looking for some technical signals out here. So the first thing that I want to start with for this listener, and I really do appreciate all the questions that I get. I had answered another one just before we got on the air, and that was dealing with the price oscillators out there. But let's stay focused on this question and try to identify. You and I have to play the role, this is not gender specific, by the way, of Sherlock Holmes, right? We're always looking for clues as to what the markets are doing. Now, what you and I have the benefit of doing when we take a look at technical analysis, for us, it's about just truly understanding different patterns that are out there and understanding the probability of those patterns when they arise and what the likelihood is that they're going to do out here. So if we take a look at the first place that you and I are going to start with the Dow trading off 48 points, and we've been in kind of a tight trading range today. First, let's actually do this. Let's go take a look at the futures contracts out here. And in the upper left-hand corner, you're going to see the S&P futures. Upper right-hand corner is going to be the NASDAQ. Lower bottom is a lower left-hand corner is going to be the Russell 2000. Lower right is going to be the Dow. Now, this happens to be the 5-hour charts that we have on our screen out here, and it has the market profiles for 4 different time periods. We have the weekly, the daily, the 300-minute, and the 120-minute time frames out here. If you look at my chart inside the data box, the color of the time frame that we're looking at matches the lines that you would be looking at on my screen out here. Now, these are great because these market profiles, and thank you, John Logan. These market profiles really help us to understand natural areas of support and resistance with regard to where buyers and sellers are on different time frames. But by being able to have these multi-time frame levels out here, what you and I can do is when one area of support or resistance fails, that helps us to understand where price is going to go to. So in the assumption that prices want to go higher, the beauty about the charts that we're looking at, and I would say at this stage that the most important chart to be focused on is going to be the NQ. Now, it's not just because Apple is going to be releasing numbers, but it is because the NQ has the power and the strength to go ahead and move the markets higher. The Russell 2000, no. The Russell 2000 needs to be out in front in a really strong bull market, and it's not. It's not even close to the front of the line. It's not even in third place. It's not anywhere near third place out there. So that's always a bit of a warning sign out here when you see the Russell 2000, which really, if rates were not going to rise out here, wouldn't it really be the Russell 2000 that would be the one that would be celebrating here? Because isn't it really the small businesses inside corporate America that will be the ones that would be most affected by any kind of a rate hike? The answer to that is yes. So we've got to ask ourselves the question, if there's really not going to be any rate hike anytime soon, then why in God's name isn't the Russell 2000 at least moving higher? Why hasn't it broken out? Why isn't it even leading? Why isn't the small cap leading the large caps out there? You just have to divide one by the other when you take a look at the indice, and right now it's turned down. So there's some disconnect out there. Now, back to the NQ, because from the NQ, as I said, that could go ahead and lift all boats higher. And as we take a look at the NQ out here, we're going to see that the only resistance that it has, this is on the 5-hour chart. Remember, I've got the weekly, the daily, the 300-minute, and the 120-minute time frame profiles out here. And with regard to the weekly, The resistance would be the top of the box, or 44.76. Well, we're way above that. The daily would be 44.56. We're way above that. So those are, see ya, don't want to be ya kind of areas. Now, they become significant areas of support on any kind of moves to the downside. So don't forget that level of 44.76. Should the markets really not care what Apple reports, but just simply take it to the woodshed to the downside. Now, I'm not saying that's what's going to happen out here. I think Apple's got a big weighting inside the NDX 100, but it's really become more of an irrelevant stock, in my opinion, versus some of the others out here. But here's what you and I know. If the NQ today, anytime today, tonight, tomorrow, overnight in the morning, takes out the only resistance that it has when we take a look at profiles at the top of the 300-minute box out here. That's 46.37.50. That's a key number to be watching, just as the bottom of that box is important to take a look at. What we can see here is that during the day, and I'll go ahead and explode the chart up on my screen, because I think this is the one that is the most important chart for you. And, well, sort of the most important chart for you and I to take a look at, is that price has been traveling between the top of the box. We saw during this last 5 hours, price ran into resistance at that level. The high so far today, 46.37.50. The top of the box, 46.37.50. Yeah, so that's the number that you just simply have to write down on a pad of paper. You see that get taken out, come back, test the support, and it moves higher. Guess what? The NASDAQ's going to move higher. All the other markets are going to move higher as well. It's got the strength to go ahead and do the curls and be able to pull those markets higher out there. Price have been traveling within that, and the point of control, 45.92. Now, if we take a look at the time frame of about between midnight and 5 a.m., we saw price come down and test that level. The low was 45.92.75. The center of the box, 45.92.45. So we can see that that is the area that is containing price. So all you really have to do is look for the high, 46.37, the point of control, 45.92. If price moves above or below either of those, that's going to tell you the direction of where the NQ is headed to. Now, if it's headed to the downside, it tells us 45.47. To the upside, what you and I really have to do is come and take a look at what's going on as we take a look at the daily charts out here. So let's do this. This is going to be just a little bit of a, no, it's not delayed at all. Let's take a look at this chart. So if it moves higher, what that says to you and I, when we take a look at just the NQ, is that price is going to go test those highs, 46.76. And I believe that that's what it wants to do, with the exception of the last 2 days. Exception of the last 2 days, we saw we had those nice wide-ranging bars. We've got two of these little doji candles. It's up towards resistance. Well, 46.76 is only one of the tests. The other test area happens to be the low of that swing point. That's 46.36.50. Guess what we hit earlier today? 46.37.50. So we've seen a test of that area. We saw 46.37.50 on October 23rd. We didn't get to that high yesterday. So that swing point has been tested and thus far has been rejected. There is no more reason why the NQ has to do any more work to the upside. It's already tested that swing point. When we get back, what you and I need to go do is take a look at the NASDAQ composite. Let's take a look at the index. And interestingly enough, its price oscillator is right now below the zero line. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're trying to answer the question. Had a great question from one of our listeners out here about, the Fed, the rate hikes, what I think the market is doing. And the question begged the response to be my opinion. And what you know that I like to do during the show is not give you my opinion so much as read the charts for you, show you patterns, provide you with the information, and let you make the decision with regard to those patterns and how things will play out. But I did give you my opinion from the standpoint that was a combination of opinion as well as to pose back the question to you. If the market is not going to see a rate hike out here, then why is it that these small caps are so underperforming the rest of the markets? They are the ones that are going to be the area that would be most impacted by the fact that rates would not be raised out here. And the way that I like to take a look at that, it's just a simple correlation between the Russell 2000 and the Russell 1000, which is the bottom of my screen out here. And if we take a look at it, when you just simply do that simple math out here, we can see that today, that is still, if you take a look at this, is really interesting. If you take a look at that correlation, we had the market breakout September 29th was the bottom out here. And what's really interesting about this correlation, I don't know if it has any meaning or not, but if you take a look at the underperformance of the Russell 2000 versus 1000 out here, it's already right back to the lows or very near. Now, this is based on a closing basis. So these blue lines that you see on my chart out here, it's based on the closing base. Obviously, today, it's going to be as of what it's printing right now. But basically, the calculation is the close of the 2000 versus the 1000 out here. And we're already back to lows. Hey, is that a double bottom? Maybe it is. I don't know. I just know that this is the strongest bounce that we have had in a long time out here. More than a bounce. It's the strongest bottom that has formed in a long time out here. This is stronger than the October Ebola scare out here. Just simply take a look at the net advancing issues inside the New York Stock Exchange. And let me just go back. I don't know. I'm just curious. In October of here's October of 2014. Son of a gun. It's not October 2015 that we were taking a look at. It's September 29th. We're way below that. What the heck was I smoking there? Okay, that's interesting. So if we take a look at the performance value, growth versus, small cap versus large caps, we're already back to the October 2014 time period. Now, during that time period where we saw that nice bottom, right, big long-term bottom inside of the Russell 2000, if you take a look at the Russell 2000, it was outperforming the large caps all the way up into that initial high, pulled back, and then it was really off to the races back in December, where the market just simply moved higher, as you know, into the early part of January out here. So we do not have that condition that is in place right now, and that has got to make you say, or should make you say, something to think about. Now, back to the summation index, and we take a look at the NASDAQ composite. In calendar year 2015, which, by the way, in 2015, if we go take a look at where the market began the year out here, it really is all about the composite. January 2nd, the actual price of the NASDAQ composite was 47.60. You're at 5,010 out here. So the composite, is the strong dog out here. But yet, if we take a look at, we're only looking at 2015 just because it's so prevalent. I can show you that, but it works this way all the time. What you and I have noticed, what has been occurring here as of late, is, and the pattern that has played out time and time again, that leads to some kind of correction or sideways move. And right now, we do have a sideways move over the course of the last 3 days, is where prices rise. But when we take a look at the price oscillator, which is really a trend-based tool out here, it is making lower highs. Now, back in the time period, it doesn't tell you when that trend is really going to take place. When that price oscillator gets below zero, that's actually an indication that the trend has taken place. A change in trend has taken place. And that's how you and I use that tug-of-war line of that zero. And if you take a look at a price oscillator that kind of peaked on February 13th of 2015, price moved higher for a couple of weeks, and that led to a reasonable retracement back down to a gap out here that was in place on February 12th. The last time, and then another time where we saw prices moving higher, and it was just a short period of time and a declining price oscillator, we saw a pretty darn good move to the downside. And what created that bottom was the exact opposite, where we saw higher lows out here with lower lows in price. So we have that exact same pattern that is in play out here. We have 3 very narrow-bodied candles out here, and it's really dangerous. And I'm not saying this is going to happen, but I'm aware that it could happen. You're going to have the cash market that's going to close, and then Apple's going to come out with numbers after the bell. And Apple could set off some kind of hailstorm and fire to the downside, and that could set up the NASDAQ composite gapping to the downside tomorrow, leaving an island out here, leaving Marianne, the Professor 2, stranded on Gilligan's Island. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzamento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So in our quest as Sherlock Holmes to try to figure out what the message of the markets might be, take a look at technically what they're communicating to you and I as we speak right now as of 1:30. We can see that price oscillator inside the NASDAQ composite. And there's no question that the NASDAQ, the NQ, the Qs, that in my opinion, those are, it's those indices, the equity futures contracts, as well as Russell 2000 that are perhaps the most important areas for us to investigate and understand. And so this pattern in the past, I promise you that as the market was making a high back on July 20th and it was all-time highs and things were moving higher, that everybody believed that the party was going to continue out here. But as you take a look at that price oscillator, you can see that it wasn't making higher highs. It was diverging from the direction of price. Now, in that case, I won't say that that led to the move down into October 24th, but the market is way smarter than I am. I will not say that it's smarter than you, but it is way smarter than I am. And therefore, I pay attention. I try to pay attention to these divergent patterns because I know that the probability is that they're signaling something to us. Now, that signal could, and this here could change by 4 o'clock. So it's really, what's that reading at 4 o'clock today, not at 1:35. But I'm doing a show right now live, so we've got to take a look at what is the meaning as you and I speak right now. And if the market closes like this, if this were the close, this would be telling us that there is some trouble that is lurking. Now, that trouble, with the price oscillator getting below zero, that increases the probability that we're going to see some type of market top. What I don't know is this a little short-term top, or is this something of more significance? One would have thought back on July 20th out here that it would have just been some kind of short-term top. That's the thing that you and I really never know out here. Now, can I make the case the NASDAQ composite wants to move higher? Absolutely. If we just simply take a look at the A to B equals CD pattern that hasn't completed, where we are traveling above the B point out here, this says without a doubt that what the NASDAQ ought to do, the NASDAQ composite, is get back up to its highs. 51, 55, 79 would be your 1 A to B equals CD. That would be close to the highs. Maybe it goes and it tags that level out here. So that's the bullish case. But in the bullish case, we typically wouldn't see what you and I are looking at out here. We wouldn't see this divergent pattern. Doesn't mean that the market's going to do what the market's going to do. But this is absolutely a word of caution. And I say it's a word of caution because we got the exact same deal inside the New York Stock Exchange. The New York Stock Exchange is behaving the same way. Right now, its price oscillator is below zero. We've seen price moving higher. So it's doing it with less strength out there is one way to take a look at that. And if we take a look at the Dow, we're not there yet. So we don't have synergy completely across the board out here. But we do have this declining tops price oscillator out here, and it's not that far. It's not inconceivable that the Dow wouldn't travel along and get below the zero line. It could even do it today, I believe. But so that is an absolute warning sign out there. So that's portion of the question. What is it that I think the markets are going to do out here, right? Because this is all about, if we don't get a rate hike, what are they going to do? If we're not going to get a rate hike, I don't understand why these patterns are present. It should be off to the races. And in fact, I would then go over and say, and I'd ask this question, with easing going on across the world right now, you know better than I do that Mario Draghi is a BSer. Okay. And before, Steve, you might have bought into his stuff out here, but you and I have gone back and take a look, and he says one thing and he absolutely does the exact opposite, or doesn't do it. So he put a nice PR release out there that they were thinking about, additional quantitative easing. He didn't use those words, but the media went ahead and converted it into those words out there. Go back and read his speak out here. And if that really was the case, and this is what confuses me, I suppose, is why was the DAX down 109 points today? In fact, why did it even take a timeout yesterday? Now, the interesting thing about the timeout that it took yesterday was price got right up to the 0.618 retracement level. That's the 0.618 retracement level off of the July 20th high. Remember, you and I just looked at the July 20th high inside the NASDAQ composite. Now, typically, at a 0.618 retracement level of any move, in this case here, whether it's a move up or it's a move down, this was the move up off of the move down, that can be a reversal area. So why is it, if they're celebrating Oktoberfest and they're so certain, forget about the rate schmike out there. How about just the mere fact that Mario Draghi is just simply going to be buying every kind of bond on the that's out there, and is going to be putting all kinds of liquidity inside the market? If there's going to be all that liquidity, why did the DAX not continue to move higher yesterday and then again today? And if that wasn't good enough, then how come the Shanghai, if we take a look at it, and the Hang Seng, how come they're not really moving higher? After, the China said, hey, we're going to take the pedal and put it to the metal with all kinds of cash out here. And this thing has done just a horrible move off of the bottom. It's not anything like what the U.S. markets look like out here. So those are pieces of information as well that I think that we would consider. I think that the quantitative easing maybe would have more of an impact than whether or not we do a rate hike or not. So then, if you really believe in Super Mario out here, and I'm not saying don't, but I'm saying don't believe in what that guy tells you, not until he actually does it out here. And then if that's the case, then why is it Why is it that the euro-yen currency pair, as we take a look at it right now, why has this thing been forming declining tops patterns out here? Because this truly is the liquidity gauge inside the market. This is the most important currency pair for you and I to pay attention to. Unless this thing has decided to completely come unhinged and it's no longer the carry trade, which is not the case out there. There's no evidence to support that. So we've seen price moving higher, and we've seen the euro-yen making lower highs out here. And what I can tell you, with the exception of just one handful of times over the course of the last several years, so that's very few times, do we see this pattern play out and not be a precursor of some type of top to form inside of the market out here. So all of these patterns, all of these divergent patterns, they can fail, but they are present right now. And so all I can do is assist you with interpreting the charts and what have these patterns meant for us in the past out here. And then I will go and I will say, let's go take a look at the following. Let me switch over to a different set of charts out here. Give me a moment to just switch my workspace. Okay. And so, if the markets are going to move higher and people are saying, hey, should I put money at risk right now or not? Look, here's the bullish and then the super bullish case inside the market. Let's take a look. Let's use the NASDAQ composite because that's the one for us to really pay attention to. And why is that the one for us to pay attention to? I think that's the reason for us to pay attention to it is the following. First of all, when we take a look at the monthly charts out here, we know that the NASDAQ composite, just by looking at this chart, it went ahead and made a 100% move of a move. That may sound foreign to you. What the heck are you talking about, Steve-O? What I'm talking about is that when you take a look at price going from one swing point high, you might say, hey, what's a swing point? A swing point is nothing more than a major intersection. Like when you're driving down the road, you come to a major intersection, and typically you turn, you make a right, a left, or what have you. It's those major intersections when you and I look at a stock chart where we get the most revealing information out here. And if you take a look at the swing point from back here in 2000, in March of 2000, it took all the way up until the time period of, that's from 2000 to April in 2015 for price to get up to the top of that swing point. Typically, when a market makes a move of a move, means it gets back to that original level out there, it's tired. It's like climbing Mount Everest. I've never climbed Mount Everest, but it's like climbing a huge mountain out there. And it takes a rest. Now, what was interesting about when the market's actually made its move back to that level, it did one of two things for you and I that said that it would go ahead and it would do something else, move lower or what have you. And what have you was it made a seventh wave count to the upside. If we take a look at the Chapman wave, the one count that I'm most interested in is wave G, is that seventh wave. That's where you can see the largest, the swiftest declines from on any time frame that you use. They don't always fail. In fact, when they do, they don't always work, I should say. When they do fail, it provides you with an important piece of information that there's a really strong trend that is underway. You've got the NASDAQ composite trading at 5,017. The actual high out here that formed that seventh wave is at 5231.94. You're talking at 220 points or so, 215 points, something like that to get back and possibly take out those highs. If that high gets taken out and price moves above it, these markets are absolutely going to move higher out here. How high? Shoot, I don't know, because this would be breaking a consolidation pattern that had been in place for 15 plus years out here, more than 15 years, quite frankly, 18 years to be exact. And it's a 4,000 point or 3,900 point consolidation level out here. What I do know is we've had a nice bounce. Absolutely. And we've had it when lows are normally formed in the fall. This time here, it took place September 29th instead of October, 12th or 13th, but it may be that it was scheduled out here. But the markets need to take out the prior high inside the NASDAQ. If it does that, as I talked about when we opened up here, the NASDAQ, it can make all the strong curls that it wants to, and it can lift all of the boats higher. So I believe it is all about the NQ. It's all about the NASDAQ. Certainly Apple's going to be a big piece of that out here. Is it, should you put money to work? No. The answer would be I wouldn't put any more money to work because you can just wait for 200 points to get some type of confirmation that the market is going to break out. Until that happens, we don't really have a confirming signal. Now, the confirming signal could actually occur, and this is how you'd like to really see it play out. You'd like to see those patterns that are in place that say, hey, there's going to be some kind of market top. Short term, medium term, I don't know what the time frame is, some type of market top out there. Then what you and I can do is we can measure the pullback. We can measure the retracement. You and I can actually go take a look at the New York Stock Exchange and make it our gauge out here. Because the New York Stock Exchange, I talked about the potential of these island tops out here. Hey, look, the beauty of the New York Stock Exchange is on the trading session, and there's no question, the trading session of October 5th, it formed that island bottom pattern. There's nothing more bullish than an island bottom. There's nothing more bearish than an island top. Apple happens to have an island top that's in place right now. The IBB or BIB, they both have island tops that are in place right now. So where would the market pull back to inside the New York Stock Exchange? And if it can do it on light volume, give us some type of reversal signal. And then we have the addition of the true Santa Claus rally taking place out here. You know, I pull back to 10,140 or a pull back to the bottom of the swing point from October 5th, 10,035, and keeping that island in place out there. You know, those would be the areas to pay attention to. But as I speak right now, I don't know anything more than you do. But if we take a look at the charts and the chart patterns out here, and I do believe that the participants of the market know more than we do, and all you and I have to do is just become the Sherlock Holmes, you know, at TFNN, then we have clues out here that the markets are communicating to you and I right now, not so fast. It really is that simple out here. And we'll see how all this plays out. You know, at the end of the day, you may say, I'm the one, forget Mario Draghi and his BS. You might say, hey, what's with your BS stuff out there? In any event, so I hope that that assists you in what I would say would be what the market charts are communicating to you and I. Take a look at some daily timeframes. We took a look at intraday timeframes to give us some lines of demarcation of support and resistance. You know, take a look at the monthly. And as Gus would say in my big fat Greek wedding, there you go. So hopefully that answers the questions. And if they don't, just send me additional emails or some things inside the den. I did see a couple of questions inside the den. One was if I could just revisit the daily NQ out here. I think that I can. And what I said here in the NQ is it's already tested its swing point. So that is done. The swing point here was from July 20th. It tested it 2 days ago. It's tested it today. It does not need to go test the 46.76. We have a rejection on price. I don't know if we've got a rejection on volume or not, but we've got certainly a rejection on price. It doesn't have to go test the high. Doesn't mean that it won't. It doesn't have to do that work to the upside. Then there was a question of what do I think about the S&P 500? The SPY has already rejected the 2080 area. If we go take a look at the S&P 500, let me see, because I don't know what time frame it is, but let's go, we can look at multiple time frames. If we look at the S&P 500, I don't think it made it all the way back to its high out here, but let me take a look at it. It hasn't. 2080, I guess in the case of the 2080 mark and your 2060, I don't so much see the relevance of that. What the S&P 500 has done is it's made, you know, a 0.786 retracement level. I would say in the case of the S&P 500, if there's a pullback, one possible area, one possible buy area, or one possible area that would provide you and I with more information is if it pulls back and it tests that trend line. That's a trend line coming off of the July 20th high, probably the high from August 18th. And if price pulls back, tests that level, that's a little red diagonal line on my screen, rejects it and moves higher, and the S&P goes up into the 2132 level and it gets back to its highs out there. So this is Steve Rhodes with TFNN. We've got the Dow off 53 points, the S&P off 11, composite down 16. Have a request to go take a look at Gilead, G-I-L-D. So let's go do that when we get back from this commercial break out here. Shire PLC up $15, Alibaba up 3. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow is trading off 74 right now. S&P down 11. Saw something flash across my screen that the SEC is investigating the timing of some transactions for recording revenue. In the case of IBM, I'm sure that Warren is very happy to hear about that out there. We'll take a look at IBM if we've got a moment. Let's first take a look at the Gilead Sciences, GILD. And the question was just simply any thoughts on Gilead Sciences out here. These are my thoughts thoughts, both from, I guess, a long or short standpoint. We can see that Gilead's trading at 110.40. If we take a look at its TAS market profile out here, the weekly profile high is 110.58. If Gilead can close above 110.58, let's take a look at what it's actually doing. It's trading into the swing point from the trading session of September 17th. That has volume of 9.5 million shares. You've done 7.5 million. You don't have to be a math genius to say price is moving into that swing point with volume. Now, does the high get tested? 113.31. Does it just get spiked and tested? If price gets above 113.31, then its next level of resistance, because there is another out here, and you can see that it all took place on August 21st when it started moving down with volume of 22 million shares. Now, we're way light on that level. So Gilead Science, in order to really prove itself, you want to see it close above. If you're looking at the bullish side or the bearish side, this is still the line of demarcation out here. You got to see it close above 113.31, preferably with more than 9.8 million shares. But quite frankly, you'd like to see it do it with 22 million shares. I don't think the latter is likely out here, but you certainly want to see it do that. Now, if it can't do that, what's it likely to do? It's likely to do anything from get down and test the 99.66 level, or get all the way back to its swing point from back on September 29th, or get down to about the 91.46 area. And that's what the chart for Gilead Sciences looks like to me as we speak right now. What did I say that I would? Oh, IBM. Let's go take a look at IBM out here. Let's go see what it is doing after the release of that information. So it's trading lower. That no surprise there. It's trading below the swing point here from August 25th. That at 7 million shares, you got 5.6. So it's trading lower with volume, trading below all market profiles. So let's get rid of those. We don't need to clutter up our screen. Let's put this on a longer-term chart and figure out where IBM is trading back into. If we take a look at weekly, we probably really need to go take a look at monthly out here. I've got 132 on my screen for some reason. That's cool. Let's go put that on a monthly chart, see if that's some kind of high volume something or other. It's really just ice on a monthly basis out here. So IBM, and that's really coming all the way back to the 1999 level, June 1st of 1999. So in other words, if you were holding IBM on June 1st of 1999, I believe we're in 2015, so that is some 16 years later, 16 years and a few months, you're basically getting back to squadouche. You're getting back to break even out here. And that's what IBM is doing. Headed to that 132 level, you're at 138.53. 125 to 132, is the general price area where IBM is likely headed to. You start closing below that 132 level, and I gave you the 125.42, a natural test. Then all of a sudden you've got IBM headed down to $100, maybe even all the way back down to the lows in 2008 out here. So that's what's going on in the case of IBM. If the SEC is investigating them for revenue recognition issues, boy, they're not using general accepted accounting principles out there. They're using some other form, and there's nothing faster in life than the speed of trust. Well, one thing. It's called the speed of distrust. Hey, folks, stay tuned. Our man David White is up next. Have a terrific Tuesday. I look forward to seeing you on wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.